three key points for why we think cake is a short. One, the concept's in a secular decline. Two, peak margins, and then working against the short case is the financially strong parts of the company, the balance sheet and the cash flow. But I'm stuck in my beliefs that there are some common things that make restaurant stocks great companies and some that make them bad companies. And when you run through this presentation, you can see why I think there are some issues that cake is facing that they are just not addressing, frankly, and they're living with the business in the secular decline from a traffic standpoint. And then, margins are cyclical for cake, as you'll see in a second, and the way the inflation is turning out for them, or we're going to go from deflation to inflation next year with cake, and that's going to cause some margin pressure and possibly a second or third quarter earnings miss is the way I think about it.
We'll close it out with this question, kind of thinking about how this all plays out here. It seems that it could be shaping out to be a doomsday scenario for cake with inflationary dairy and labor costs in 2017, with them unlikely to be able to price for all of that. How do you see this unfolding?
So absolutely, and that's But it's not going to unfold this quarter. It's probably not going to unfold in the first quarter. But as we get through the first quarter into the second quarter, that's when That's when the issues. If you were to put a gun to my head and say, what quarter do you think this would begin to start to play out? I'm going to say the second quarter is when we're going to start to see the potential for sales slowing further or not recovering, because people certainly have a big recovery baked in, and or inflation coming back. And when they report the first quarter numbers and give guidance for the second quarter, they probably are going to disappoint. That's the way I think it's going to play out.